I was asked by several people to clarify my comments about my desire to have as large an accumulation of gold eagles heading into retirement as possible, and that in my view there are some very important advantages to this approach over having a mix of various different coins. This is my clarification. It's going to be a quick one because I need to pull dinner together. Feel free to ask questions in the comment section. Gold eagles have some fantastic qualities for U.S. investors. They are one of the most liquid coins in the world, and so there will be no problem getting a good price for them when they're sold, nor will there be any delay. For the same reason, a person will always know where he or she stands wealth-wise. Simply tally up the number of coins held and multiply by the going spot price. They are alloyed, and so they tend to be resistant to damage. And in addition, the language of the Gold Bullion Coin Act of 1986 specifically uses the language numismatic when describing this coin. And so there are certain extra safeguards built in should there be a similar executive order to the one that FDR passed in the 1930s. Now, I doubt such an action will happen, but it's nice to have that little bit of extra language in there as a safeguard. Besides, since the U.S. Mint produces and sells these particular coins, it would look very, very bad to call in these particular coins should there be some kind of a confiscation. But anyway, besides all that, all these are just icing on the cake for me. Let me talk about some potential advantages that people probably don't consider, especially when it comes to taxes. Now, if you recall, I did a video a while ago called the mythical 28% collectibles tax, where I showed everyone that when precious metals are sold, any capital gain is taxed as ordinary income, and that the 28% is simply a cap on the maximum tax rate. Now, most of us, if not all of us, are going to sell some of our coins in retirement for cash with which to buy things. I certainly plan to. And when I reach retirement, I know that the majority of the coins that I own will have substantial capital gains when I sell them. Now, I also will have some coins which were purchased at higher prices. These will most likely be the ones purchased shortly before retirement. They won't have much of a capital gain at all associated with them. Now, reporting capital gains to the IRS is a must. Even though gold eagles can be sold in unlimited quantities without a broker being required to send a 1099 to the IRS, the large deposits of coin broker checks into a bank account will certainly be noticed. A person would be wise to report when the deposits came from, or report where the deposits came from, and have the paperwork to back it up. So what does this have to do with having a homogeneous collection of gold eagle coins? Well, a married couple with no dependents will pay no income tax on the first $21,000 of income, and only 10% on the next $19,000. This means that if reportable income can be kept to less than $40,000 per year, the couple will pay only about 5% of that in taxes, or $2,000. Now, this doesn't mean that the couple has to live on only $40,000 per year, only that the gains need to be kept to $40,000 or less. Now, this is easily done by selling a mix of coins that have high and low capital gains associated with them. I know that in retirement I will be able to sell up to about $100,000 per year of gold coins and only pay $2,000 per year in taxes on them if I choose the right mix of newer and older coins wisely. Now, I don't plan to sell up to $100,000 worth of coins every year, but it's nice to know that I could if I needed to. So, in other words, I will pay very little tax on my gold coins, even the ones that have appreciated a great deal, and I will do this without breaking the law. Wait, you say. You can do this with any mix of gold coins. Yep, you're absolutely right, you can. But it does make the job much more difficult. When you sell, the paperwork that your broker is going to give you will list the type of coins that you sold. You will need to hunt through all of your paperwork and find matching receipts for the particular coins that you sold. Hopefully you'll be able to make the math work out to your advantage. When you sell the gold eagles, the broker will simply write down gold eagles on the receipt with the number of them that you sold. He won't be any more descriptive than that. Then you can go through your purchase receipts and choose which ones you want to declare as sold. And the nice thing is that because each of your eagles has a date, you can choose to liquidate your eagles in any order that you choose. You don't have to worry about first in, first out accounting like you do with shares of stock. And you can decide which coins you actually sold at the end of the year and just make the math work out to your maximum advantage. So anyway, that's my basic reason. Having a homogeneous collection of gold coins does have its advantages, and you can do this with any kind of gold or silver coin. I just like the eagles. And it's nice to have all of the other advantages that go along with the eagles as well.